The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, this is Basil Chapman sitting in for Larry Pesavento. Larry's still in Hong Kong. He's ready and able to do everything, but the internet's that he's using is just not quite as strong as it should be. So I'm doing a show for him today. Trade what you see. Of course, it's not the same thing. I'll do my best. Just wanted to show you these patterns here within the Chapman wave methodology. Let me just show you, drag this across. What I'm always looking for is from the lowest, most identifiable low. We merely count each successively higher peak. I alphabetize them, uppercase on the way up, lowercase on the way down, looking for at least 4 higher peaks to go from a buy signal to a buy mode. At that point, other things can happen. That's the most important thing you can, the whole concept is based on those 4 peaks. From that moment on, there are other techniques within the Chapman wave that take over. You can go to E, F, or G, and you can have an alternate count, and then even have a brand new, under certain conditions, have a brand new buy signal going to a buy mode almost immediately based on a Chapman wave instant restart, which could take you to yet another series of higher peaks to a D. Okay, so D is your 4th highest peak. That's what we're looking for. I'm also looking for, right here, if I can get it, patterns. It's really just the cup formation and the arch formation and a straight line. Within the cup formation, you can get, you're going from one point that pulls back to that point. It can be a U or a V-shaped pattern. In the arch formation, it's exactly the same. It could be an inverted V, going from one point, rallying, coming back to that point. Within that context, there's an H pattern. And that H pattern says you've come down sharply, and you bounce, and then you pull back, and you retest the left side low. If you break it in a certain way, it's very negative. And if you hold, you can rally all the way back to the arch high, and that could become a very positive formation, reverting back to the U formation. So, and the H could be inverted. So, cup, arch, straight line. 3 patterns, and that's all we look for. What am I looking for? There's your cup, which actually turned out to be a bowl formation. There's your there's a mini cup right there. What did? You went to a peak D in the E-mini, the 2-minute chart, from the lowest, most identifiable low bar. Look at the way the MACD held that beautifully. Look at the way the MACD is good, and now it's starting to weaken. Where did it go? It went to a second peak D, and now it's pulling back. I have a left side, right side price time match. It couldn't make it. It did it in time, but it didn't do it in price. Now it's starting to pull back. Now we have to look for other techniques. Good. I wanted to get through that. Now we can go to the nitty-gritties. What have we got now? We've got the dollar down 3 cents at 96.76. It made a peak D at 97.71 in the weekly chart, the week of the 14th of December. Pull back quite sharply, 2 points, just over 2 points, to 95.02 the week of the 11th of January. Then it rallies peak A, peak B, peak C was exactly to the penny. This is the dollar index, to the 97.71 high of December. Then it pulls back. Why? Because cup formations, if they double top and pull back a third to a halfway from the lip on the left side to the base, could very well come back down to the low that was made. Hey, wait a minute. This only went down to the 95.60 area, and then it bounced. 95.74, and then it bounced. So the MACD is starting to improve in the weekly chart. The stochastic is not that great as a 65%. Price is the arbiter of a trend, and the trend says we're in a trading band in the dollar. If you look at gold, we're in a trading band in gold just from the last high that was made in just about 1360 down to the low that was made in the 1280s, and now we're at 1321. Just on the, let me show you something to. Now, Larry doesn't do this, so I thought it's good to be able to look at different techniques. Look at the way this orange line has been a repellent, then a propellant, repellent, propellant, and it turns out that this orange line for a long time, right up until maybe, let's call it May, June, was in fact like a fulcrum, a propeller shaft where the price was trading below, then it went above, then it went below. And now what is it doing? It's gone right back after dropping very sharply, the sharpest pullback it's had since back in 2016. Gold went to 1167, and that low was created, I should have put the date, right? This is the weekly chart. This is the week of August the 17th. I'm going to put that in because it's just nice to have it already notated. 8, 17, 18. And then rallied very strongly right here to the 13, to get it exact, it was 1356.2. Now, this is a continuous contract, so prices can change, but the pattern never changes. But the price does. There's your peak D, then went to peak E, and then pull back. So here we are, again, at a peak E, and now we're holding the 14-period moving average, the 14-period, the black line. The green line on the way up is the 9-period moving average. Orange is a 200-period, and here we are, like a magnet. It's stuck around that. And I think that's going to remain for a little longer. In other words, I think gold is in a trading band. I think the dollar's in a trading band. None of them have made big commitments yet to either side. Okay, so I just wanted to get that out of the way. Silver hasn't been acting as well today. Gold is down 0.3. And silver is down 0.04. It is not as good a chart pattern. It's really struggling. Look at that 200-period moving average in the daily at 15.60. Keeps just getting close, and then it pulls back. It needs to break into the 1580s, and that'll be a positive. In fact, that'll start leg D. As soon as it gets to 1566, that starts leg D, and D is what we're looking for. Look at the B, the D that made that double top. That top was made right there the week of the 22nd of February, the 16.293. So I just wanted to go through a couple of these things. Comment in the den. Dave White says, Boeing up a buck after a fake news story yesterday about 737 MAX 800 losing an engine. I didn't see that. Yeah, let me just talk about that for a moment. Within the context of Boeing, look what's happened over the past 3 weeks, 4 weeks. So it had that terrible news. It makes a high, all-time high, 446.01 on the 1st of March. There's that peak D again. And then what does it do? It pulls back. It goes under the 9. It goes under the 14 for 5 days. And it's a nice green candle trying to form some kind of a base in leg B. And then all of a sudden over the weekend, there was that horrible, the tragedy that occurred, the second tragedy in 6 months. A tragedy that when we look at the evidence in hindsight, it's always like stocks, right? It could have been, oh, what a great short. I actually been talking about that on my show, about how Boeing looked to me like it made a top and that we were preparing a 445 put. I never actually put it into place. Of course, it would have been blood money or something if we made that money from 440 down to the 363 level. But look at this. Since it made its low 363, it's gone a little lower to 361.50, and now it's trying its best to form some kind of a base. This base is saying to me there could be little pop-ups to the upside, and it will keep coming back to test that base. Actually, for our traders, we've got a position that we're using to try to trade this. We'll see if that works. I'll be right back. Basil Chapman sitting for...
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Basil Chapman sitting for the one and only Larry Pesavento, and we're looking at the E-mini unchanged right now. You see in the 2-minute chart, we made that PT, been talking about that in Chapman Wave methodology. I put a down arrow because the technicals were weakening. It could come back and retest, but the down arrow is the technique that I use, and a plus sign would have been there until it goes to a down arrow that says sell signal to sell mode in the 2-minute chart. Yep, it's just dropped 50 cents again. The peak F in the 5-minute chart. And I love to look at this. This is what I use all the time in intraday trading. So the 2-minute is like a daily chart. The 5-minute is like a weekly, and the monthly would be the 10-minute chart. 10 minutes only gone to a peak C, but at the same time, it's way underneath the previous high. So this could fail at any point. And I haven't yet been able to put a down arrow in the 5-minute because it's above the 9-period moving average. It's above the 14-period moving average, and the MACD is still strong. That says be careful because the 2-minute is testing the 200-period exponential moving average, using it as support. Left side, right side price time actually working out quite nicely here. So be ready that there could be a little bit of a bounce, and we'll see what happens. Okay, so I go through that now. This is going to be very important. I'm going to get out of that. I want to just quickly run through some things. Look, W. This is wheat. That's wheat trading at 470.5, up 1.25 in leg D. That's what we look for. So you've gone to this is one of the smallest moves to the upside and the quickest moves you can get, really. Not the quickest, but it's really quick. Going from the low of 427, round number low, back on the, was that 427? Yep, 427 on the 11th of March. And here we are, we've already got a leg D with a little doji candle. So just be a little careful here. But the MACD is good. Stochastics at 87%. This is really nice action. The weekly chart is just not good at all, but it is starting to turn around. The 9-period moving average of 497.5 needs to be cleared so it can try for the 14-period at the 489s. Monthly chart is still very poor. Look at corn. Corn is holding okay, was holding okay. It's at a leg B, but that's a nice, much bigger move from the 361, also around number low that was made back on the 12th, I think it was. And then it runs up to the 380 level, trading right now 370.5, down 2 3/4. I'm looking at this and I'm saying the MACD is good, stochastic's good at 87%. This is going to be a real test because in the weekly chart, it's very poor action. And this arch formation went under the left side low way back in September at 364 round number. And what did we have? We had a test of at the 361 low, the week of the 15th of March. Nice bounce, trying to clear the 9 and the 14 period. It's just struggling there. The monthly chart, funnily enough, is actually starting to improve a little bit more, even though it's not a great looking chart. We're going to see what happens. Corn at 374.5 needs to get to 382 in the next 2 to 3 weeks without closing under 372. And the other one, missing one is the soybeans. Soybeans is trading right now. This is a deeper arch formation. There's that lowercase h. Remember, we were talking about that before in the Chapman methodology. And that's in the daily. Look at the weekly, a much larger one. And look at the monthly. And that says, there could be a little problem here. So we're going to be watching this very closely. If you look at TRCCI, and this is the Thomson Reuters Equal Weighted Commodity Index, there's been a really nice rally off the low that was made. Let me just show you this in the monthly chart. TRCCI. Monthly chart, you see, I love when you do this. You're looking at a chart and it looks fantastic in the short term. And then you look at it in the intermediate, the next time frame, you say the daily go, and you look at it in the week and you say, well, it's not too bad. Then you look at the monthly and you say, oh my goodness, the commodity index has really been in a rectangle formation, and a rectangle formation, as I always say to subscribers, can last a lot longer than your patience. Why don't you try from 2015, when this commodity index was at the same price as it is now, well, a little higher, for maybe, about the same. 411 right now, it was at about 415. It's just been stuck in a range. It's gone down to 350. It's gone up to 447. And here it is at 411. This is the commodity index. When commodities finally get traction, the Fed is going to be so quick. When you see interest rates start to rise and you see commodities start to rise, see gold breaking out to the upside. I don't see it yet, but I think when it does happen, I've got a feeling that the Fed is going to have a tough time trying to keep the genie back in the box. They're going to wish that they still had this kind of deflationary aspect. And if you look at this, it's going to peak C, D, E, F. This is going to be very interesting at 411. Can it continue high into the 415s, or will it have to test the 200 period and 9 period moving average and 14 period moving averages down in the 407 area? We're going to see. So I thought I'd mention that. I don't often show it in my show at noon, the Tiger Technicians Hour. So I have a service called The Opening Call. It's a very comprehensive daily service. I'm going to be doing a webinar for subscribers. You can only go to this webinar if you are a subscriber. It's The Opening Call by Basil Chapman, live subscriber event announced Wednesday, April the 3rd at 5 p.m. Eastern Time. Anything goes. The stock market's key phase. Now, I say anything goes. One is a whole social aspect. Look at this, 1920s, the Scandal Walk, second annual event, George White's Scandals of 1920 with Ann Pennington, music by George Gershwin. He was a famous dancer and choreographer. He did George White. This is the 1920s. Hey, are we having scandals today? Hey, wait a minute. Did we have some Republican presidents down in the 1920s? Did Coolidge hand it over? So Harding with the scandals. You remember why am I forgetting the name all of a sudden? So there was the famous Teapot Dome scandal and others. And then Harding hands it over to Coolidge. Coolidge hands it over to a businessman, Hoover. Do you see any parallels here? Anyway, I'm going to be talking about this, the socioeconomic, political aspect, as well as the stock market in my webinar coming up on a week from tonight at 5 p.m. And why? Was the timing good for this? Are we having a very interesting period here? Are there conflicts going on? Were there conflicts in the 1920s? Were there political conflicts? So this is a subscriber event. I'll discuss where we are in the market currently, how to read the technical tools that will show you where the market is heading. I think that the end of March, the candle for the March close will be really important. The outlook for 2019, 2020, I think is going to be fascinating. I think there's a replication of historical norms. The current risks versus the potential rewards in the market, specific sectors and stocks to monitor, including FANG stocks. This workshop will be archived for all subscribers. What a time to be doing this. I'm really looking forward to it. Okay, let's get back to the nitty-gritties here. If you're looking at the different sectors, let's just run that right now. Let's go through the IWM. The IWM has been very weak, had a better day than the others yesterday, but it's still been very weak, making lower lows and lower highs. Look at the monthly chart. This is the Russell 2000. 173 down to 125, a 50-point decline. Rallies back to the 160 area. It's at 151 right now. What is this telling us about the small cap stocks? Hey, wait a minute. IYC, this has got Amazon in it, holding beautifully near the highs recently, but off the all-time high. What does that mean? I'll be back. We'll talk about it. Basil.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, Basil Chapman sitting for Larry Pesavento. Markets open, bells rung, Dow's up 42, S&P's up 197. This is going to be very interesting. Now, one of the reasons why for my subscribers to my opening call, we've not gone heavily short is because there are 3 really important factors that I like to look at. One is you need a dark cloud cover. What does that mean? You need some kind of news that's sitting out there, taxes, tariffs, whatever it is, Brexit, I don't care what it is, but it needs to be hovering over there. It needs to be somehow lurking in the background that just keeps coming up as a very important market-related issue, number one. Number two is I want to see technical weakness coinciding at that very moment. We have technical weakness. Even this IYC, which has been a stellar performer, does have Amazon, Comcast, Disney, Home Depot, Netflix, McDonald's, Walmart, Starbucks, and Lowe's. I want to see if this is a peak G-top because it's starting to arch over. Remember the lowercase h? I want to see it arch over instead of a 203.06 in 2 days' time. I want to see it somewhere now under 202 and the low 202s. That'll say, whoops, arching over because the MACD is turning down, stochastics weakening below 80% to 72.5%. I want to see, we spoke about the IWM, the Russell 2000, up 0.16. It's actually leading up 0.11%. I want to see this start to make a pullback from 152 down to the 150. So I need the dark cloud cover with news that just keeps coming in, and then it comes in quicker and quicker and quicker. At first, it's like just once a week to give you a hint as the market's pulling back, and then it becomes a bad news event. At the same time, you've got to see the VIX index come alive. The VIX index is now up 0.04 at 14.72. At this level, it is still saying nothing to see here, folks, until I get back into the mid-teens, into the 15s. In other words, at the end of the day, if there's some kind of a pullback and the VIX index market pullback and the VIX index, the opening today was up at the 15.51, starts to get back into the 15s and holds there, that's going to say, oh, okay, now you got to be careful. And the other is a kind of a conglomerate of things. I want to see how bond yields are. I want to see the TLT, because if the market starts to pull back sharply, money comes out of stocks and goes into the so-called safety of bonds. So the TLT has been acting very well over the last maybe let's call it a week and a half. And it's at 125.33. I think it will make its leg D above 125.94 to go to leg D. And then we're going to see, look, it's already a D in the weekly chart. So this is a very important moment. Then it's looking at this dark cloud cover of news. I want the news to be impactful. It can't be just on the side. It's got to be kind of important. Remember, we used to have impeachment. We used to have tariffs. We used to have Brexit. We used to have the trade war. All of a sudden, a lot of this is sort of fading. It's the reason why we only started a short position yesterday, and we're actually waiting for another one today if there's a pretty good rally in a particular sector. But in the meantime, back at the ranch, what I am looking at here is I don't see the dark cloud cover as being meaningful just yet, and it won't until we start to see. Let me just go back to the Dow. Look at this. The Dow is up 100 points at 25,756. This is kind of nice action after yesterday. Remember, if we go to 25,797, you've extended yesterday. If you close above 25,796, you're over this long-legged doji candle. It says you could even have another day of up move and then probably come back to test one of the moving averages of importance. In this case, it'd be around about 25,690 moving average. So I would say this is a very important moment, and only in the shorter term and only in narrow parameters. What do I mean by that? I mean that the weekly chart, look at the weekly chart here. The MACD is very strong, not as strong as it was back at the high of October at 26,951, the all-time high. But look at the plunge to the 19% correction, 20% correction to 21,712 in December. And look at this rally back, and look how the price is nicely above the green line, the 9-period moving average in the Dow, up above the 14-period moving average. Look at my little trend line, got left side, right side price time match here to that midpoint. We've already passed it in terms of getting to the all-time high, so we have to use the lower ones. And it says, so far, price is just in a trading band. Maybe this is the consolidation after the huge move down and the huge move up. Now we're consolidating. So did I hear something that said we might have a caller? Nope. So I'm going to do this. I'm going to keep your eye on the middle chart. That's the Dow. Look at the S&P. S&P, look at that. Even stronger than the Dow. Yes, this is a bounce. It could be a peak G. We could make an arch formation and come down. But it's saying, you know what? 28, 23 right now. A close above the high that was made last week of 2860.31 would be very positive. But you've got tremendous support at 2769, the 9-period moving average, and 2747, the 14-period moving average. And even today, having moved up like it did, even yesterday's last half-hour bounce was saying, you know what, you should, in a bear phase, you get the exact opposite. You get that move to the downside that's very sharp, and then there's a rally attempt, and it fails, and you go to lower lows. We don't have that right now. So this is just an attempt to start to test the waters for weakness coming up over maybe the next few days. But of course, you've got end of month buying coming up. You've got the beginning of the month buying coming up, first 2 days of April next week. I'm looking at this and I'm saying, I think that the market needs more of a timeout. I don't know if it needs all that much in price to the downside. So let's see what happens. Question I had here, what is it? Yeah, okay. So, yeah, I don't really want to spend time on this, but a question came up. So Boeing is up 2.32, up 372.70. That is nice. I just think these are bounces within the range. It's saying Boeing's had the worst set of news. Other factors are going to come in to take it below 360. But in the meantime, there will be these little trading balances, and I think that's what we're looking at. You just treat it as, I wouldn't be buying Boeing, but you could use the other mediums to just trade it. So the next thing we're looking at here is, so did that. Yeah, look at the QQQ. The Q's right now up 21 cents at 179.25. Not great action. I'm pretty sure that we're going to make the H pattern, and we're going to be testing 177, the 177s in the Qs, maybe go a little lower, and then I think maybe now we'll have some bad news that comes out. So 173 to 171 is major support in the QQQ, the Invesco QQQ Trust Series. This is an NDX 100 trading vehicle. So I wanted to just quickly, as we're about to go to a break, I am Basil Chapman, host of the Tiger Technicians Hour, noon every day, doing the 9 a.m. show for Larry Pesavento, and the euro is down a little bit, and the USD JPY, this is the yen, is up. No, it's down a little bit as well. I'll be right back. Basil Chapman, Tiger Technicians.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Hi, folks. So, you remember we were looking at in the Chapman Wave methodology, we were looking at always that peak D in a buy mode. That's what you expect. So here's the 10-minute chart. Remember, daily, weekly, monthly. This is the 2-minute, 5-minute. This is the 10-minute chart. And what we did is we finally got that big spike. And usually at opening, you get a big pop-up if the futures are positive. And then you start to get the real trading part of the day. So we're going to be watching to see what happens. This is a leg D. It doesn't become a peak D until there's no new recovery high. If there's no bounce above 2831.75 in the next 10 minutes, this will become a peak D. The MACD is actually improving, the moving average convergence divergence, and the stochastic still at 80%. So this is good. All right, let's get back to our nitty-gritties here. Oh, let me just show you this. We had a caller about 2 weeks ago talking about gush. We were looking at the Chapman Wave methodology in terms of this is the daily DX S&P oil and gas bull 3 times long. This is the oil and gas trading vehicle. We were somewhere around here, and I said, yep, it's got a peak D, one peak D. It made another peak D in the 30-minute chart right at 3 o'clock on the 21st of March at 12:13. Pull back very sharply. Look underneath all those troughs there, and it went down to 9.85 for 2 bars. That was 10 and 10:30 on the 25th of March, and then it started to move. They went to peak A, peak B, peak C, and now we're waiting to see, is it going to go above 11.47 to start leg D? All right, just thought I'd show that, just to cover different areas. Here we go. Oil. Crude oil right now is trading at, so I had mentioned the yen is okay. It's sitting on the weekly 200-period moving average. Isn't this important? Look, you don't need any of these moving averages until you need them. Look how it was resistance in the daily chart. Then it became support. Look, support. Boom. Now it's resistance again at 111. And we're at 110.48, trying to rally. And it's sitting on the weekly, sitting right on the weekly support, the 200-period moving average support of 109.90. And it's trying to get above the moving averages there. That's why I use it. It's just not like it's the Holy Grail. It is just another tool. Okay, I wanted to show you, I was about to go to crude oil. Crude oil, I was looking for a leg D in crude oil. Will we get that? This is the daily chart, made a peak C. Yep, we've got a little doji candle. If that was a D, I would have said it could be a deeper correction, but it wasn't. It was a doji at C in the continuous contract at 60.39 the 21st of March. Pulls back where it holds the 14-period moving average, spikes back over. Look at the magnet. I'm going to just circle this for the moment. Look at the magnet, like even an oval pattern, of this 200-period moving average. Did I need it? No, but now I need it because it's telling me that this is saying you can pull back under it, but you're coming back to test it. You can go over it, but you're coming back to test the 59.47 level. I'm anticipating that there will be a push above 60.39. That nice email from Fred the other day saying he's positive crude oil. He gave me a Gann theory analysis. Yeah, I think it can go higher. I like it. The weekly chart, look at this leg B. It shows no signs of pulling back. It's not a huge move, but it went from 42.60 to 60. That's almost 20 points. I would say 50% gain is pretty good. But at the same time, it was at 76 back in October, going to 42. So this is good. The MACD is very strong. The stochastic is holding at 92%. That's fabulous. I like crude oil. I think it's doing very well. All right. The question I had was, natural energy. For any of these commodities, folks, I don't trade them. I follow them all the time based on the Chapman methodology because I find it's very important for me to keep in touch with what's going on in these areas. Was that no, that wasn't a peak. And was that a high? So that went to 2.910, 2.911. So that was a C. This went to a peak C minus because it's failing. C minus in an arch in an arch formation after the cup formation. I love the way markets can swing from one to the other and just keep repeating over and over, especially when it's in a trading band. Look at this. Look at this. A very big arch formation, then a rather deep cup formation, then a long arch formation. Just keeps going in this oscillation. I love this kind of oscillation because it gives you a rhythm. It gives you, but look at this. The MACD is now not anywhere close to as weak as it was back when it was back in February or late January. So the MACD is saying we could be close to some kind of a support level at 2.699 right now. Stochastic saying it needs a little bit more on the downside at 21%. It's probably going to go to the teens, and then we'll see if it can hold. But I don't see anything much right now in natural gas. This is a continuous contract. I don't know if people use this as a trading vehicle for their as a route for their contract, or they use other things. I don't know. All I'm saying is that it's rolling over yet again. Look at the Eiffel Tower. Goes straight up, straight down in the weekly. Look at this monthly. Eiffel Tower, straight up, straight down. Looks like an uppercase A. I love this. Patterns repeat over and over because all it is a conglomeration of human emotion. And it's a price point, a fixed price point. Right now at 2.701, it's a fixed price point. And that's just giving you a clue to say, yeah, at 2.702, make a decision. If it's moving, that means that you have to look at the next time frame, the next tick up or down, and treat it as a new venture. All right. So we've got that. We've got that. Oh, TLT. Let's look at bonds. Oh, there's your leg D. That's what we were anticipating, the TLT. I don't think it's done that yet, but bonds have gone to leg D, and now we're going to get a test. What happens next? It could keep going because there's only a leg C in the weekly. Look, the monthly is in leg B. This is going to be very interesting. Now, I don't think I've got the chart that went all the way back. They changed platforms. Somebody brought them over. So I don't, maybe I do. Let's see. Squeeze, squeeze, squeeze. Now, let me do this. TNX. Let's go. Oops. I think I lost it. I used to have it and I loved it, but I don't know if it was bought out, the actual contract. Let me see. Have a look at this. This is a TNX down 0.37 at 23.77. It had a high back in October of 32.48, 3.248. Now, look at this. Squeeze. I had spoken about 20 years ago about the Japanization. Oh, it keeps going. Good. It's still there. The Japanization of our yields, copying Japan as they went to zero. I had a question here. Paul wants to know, Germany has issued a 10-year bond, it's a Bund, with a negative interest rate. Would you explain why anyone would want this? I cannot explain it. All I know is that I'm absolutely sure. I could be wrong, but if memory serves me correctly, in Japan, they had a bond that essentially was a negative bond. So the question is, why on earth would you buy a bond that has a negative connotation? My only conclusion is that if you want safety and you think you're prepared to lose just a fraction, it's just a fractional, that's one way to do it. After all, if you put that money up into anything like an equity or anything with volatility, you could lose 20%. So if you want to guarantee, and this is where you have to be, maybe that's it. I have no clue why anybody would want to do that, but that's it. Now look at this. This is this major trend line to the downside. It broke out for a moment in the 10-year Treasury note going all the way back from October 1987. But the high was in September 1981. I'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, just to wrap this up, and I'm hoping to be able to do the show again tomorrow for Larry. He'll be back Friday, so this is temporary, obviously. So just quickly, the 2-minute chart made kind of what we call a rogue wave in the Chapman Wave methodology. This is called a rogue wave, where you get the sudden spiral to the upside, even though the technicals were weak, and the price went to 2831.75, pull back to the 200-period moving average yet again, 4th time, try to bounce. If the you see on the left side, automated 2830 is the automated resistance, Chapman Wave automated projections. 2822 is key support to 2820, goes under 2820, goes to 2818 at any point. It says, you know what, the upside is going to be really limited today. And that's the peak E in the 2-minute, peak G, rare, peak G in the 5. And there's your peak D top. So far, I still haven't been able to put a down arrow because the MACD is still good, but the price says, whoa, this is going to be tough for the 10-minute chart. Just wanted to give you that. Just make it real easy. At the end of the day, let's go back to the volatility index, VIX.X, trading right now at 14.83. If by the end of the day, the Dow is down minus 35 or more, and the S&P is down 5 or more, I'm going to put it this way, between 110 and 2 220. If the E-mini is down about 5-6 points, so it's probably going to have a weak close. And if the Dow is given back most of the gains, is down about 30 points, that's going to be weak. Anytime during the day from now on, if the Dow gets to a plus 50 and the S&P goes to plus 6s, that's good. But that's, I think it's going to get harder on. I think we're making some kind of a top here. The consolidation is underway. Watch this closely. VIX going into the 15.30s says be careful. Stay tuned. You've got Tom and Tommy coming up. You've got the bull bear binary option program. Then you've got Think or Swim. Then I'll be back at noon for my Tiger Technicians Hour. Don't forget my webinar coming up a week from today, April the 3rd at 5 p.m. Anything goes. We're going to talk about a lot of things and what the plan is for the rest of going into the summer and the rest of the year. So stay tuned for the programming coming up. See you later.